Well, good evening, everyone. It is 8 o'clock, straight up on the nose, Eastern Time, and I'd like to ask you, do you know where your stop-loss orders are? For those of you just joining for the first time, this is AJ Monty, and I am the Chief Market Strategist for the Market Guys. And the reason I ask you that question with regard to stop-loss orders is because there's a lot of news breaking that is telling me we are getting very, very close to the correction that most of the experts have been waiting for. Just to kind of give you an indication of that, I have a chart of the spiders. This is ticker symbol SPY. It's the S&P 500 ETF. And this vertical line right here is a timeline. When they go horizontal, that is a price line. When they go vertical, it is a timeline. And what I'm going to do is I'm going to back this up for you so you can see where the timelines have been falling. I mentioned this in the last web seminar, which identified the highs of the cycle. And this is a 7-year cycle. The peak in 2000 was met right here, hence the reason for the vertical line there. 7 years later, we had a peak, which was right before the massive sell-off in 2008. And lo and behold, look where we are now. This, again, is perfect timing for what we've been talking about. And more importantly, as I zoom into this picture, you'll see that the volumes are actually dropping. Look at the high peaks of the volume on the monthly chart. This is a 20-year monthly chart, and the volume is steadily dropping each and every month on the highs here. As I zoom in to the weekly chart, you can see we get closer to that timeline, and then of course the daily chart is literally bringing us days away from that 7-year mark. Now listen, this is not an exact science. It could go even a couple of weeks past that timeline and still be considered part of the 7-year cycle line, and that's okay. But when we're approaching such a critical point in time and you don't have stop-loss orders set up to protect profits or to minimize the loss, let's say the market goes out and drops and takes money from your account. Who's really at fault? Is it the market because it dropped? No. The reason anyone loses money, whether it be a large amount or small amount, is because people have adjusted their stop-loss orders, or they get at points according to how much they're willing to risk. And I've always said that if you allow the market to take money from you, just give it enough time and it will. So our goal is to be very, very mindful of the support levels and making sure that we're protecting ourselves. Now I'm starting off with the spiders. I normally start off with the Dow, but I want to start off with the spiders because I'll draw the price level here. Look at what's happening. This is a high from July 23rd. And you can see that there's some highs back here in July, early part of July. If I take my price line and I draw that, trying to connect as many of these highs as I can. It doesn't have to be exact. Remember, support and resistance are general areas. You can see that this former resistance area was broken here in August and is now holding as support this month of September. And again, we're getting very close to that timeline. So we have an intersection here. Today, let me go to a headline that I posted on the Market Guys Facebook. Let me just pull up a site here. Let me show you. There was a report that came out, I think it was through CNBC, where they were talking about the death cross. Here it is. By the way, I don't know if you had a chance to glance at my news page, but I have several news sources that I use to cross-reference one another. I subscribe to CNN, I have Fox, I have Bloomberg, I have Drudge. I try to get all the news and draw my conclusions from what I'm seeing. Let me get rid of that voice talking there. Hold on, let me get rid of that. I don't know if you're hearing that. But look at what's going on here. You'll see this is the chart that they bring up. on the Russell 2000. And what really is being highlighted in this particular report is, they call it the death cross. It's when the 50-period moving average, the shorter moving average, starts to cross over the longer moving average. Now that's point one. And if you go to this page on CNBC, you could listen to the report that was put out, the video report. One thing they failed to mention is that not only is the 50-period moving average crossing below the 200, but the price has dropped below the 200 as well, and we're seeing lower highs forming over the prior months. Since the high in March, April, we had a lower high in July, and now we've had a lower high in August, September. So the highs are getting lower, and the moving averages are crossing. So again, another reason to be extremely cautious right now. And as we move forward, I'll show you some other things that we could be keeping an eye on. Now let's go to the diamonds. This again is a daily chart of the diamonds. It's a daily candle chart, and we recently went into new high territory. But look what's happening here. Look down at the volume, please. Pay attention to the volume. Don't ignore that. We have a roll reversal high right here. Resistance, resistance, broken. Today, we closed right on that support level with a fairly long green candle and an accelerated negative volume yesterday. That's pretty high volume. I'm sorry, that's Friday. That's pretty high volume for a daily candle. Again, look at the highs back here. This is a daily chart going back about a year, and you'll see that Friday's volume is pretty. It's up there with the highs, even going back as far as November of 2013. The high that we experienced last Friday is right up there with some of the highs that we've seen in the past. And when you see negative high volume, and then you see the drop in volume, now follow me here. Today's a big red candle, but look at the volume. That's about 30% less of what we saw on Friday. What that's telling us is that it stopped right at support. There's a lot of people now, what do I do? Do I buy? Do I sell? They kind of dropped off because we don't know. It's right on a support. But watch what happens tomorrow. If at any point, even during the day, see, I could pull this up and move it as an intraday chart. Even during the day, tomorrow, if the stock is closing or trading down below this roll reversal, and you see an intraday acceleration in volume, as the stock is crossing down below this line, that means the sellers are starting to move in. And there's really no reason for you to panic or anything like that, because we're not in a capitulation state of any kind. We are simply just cautious. We're watching, and again, we're watching the moving averages as well. So we looked at the Russell 2000. We looked at the diamonds. We're at a critical point. We're approaching that 7-year timeline in the cycle. And we're looking and scanning the weekly and the monthly charts as well. Now let's look at the Qs. QQQ is the ticker symbol for the NASDAQ market. And if you go and look at a weekly chart or even a monthly chart, you're going to see an acceleration in the trend. But look again at the volume. Again, I really love talking about volume because it's the leading indicator that is most overlooked. And you can see very, very steep trend. Let me get rid of some of these trend lines, and I'm going to draw, again, for those of you that didn't make it for the last web seminar, I'm going to show you how to draw a fan line so that you can see where the breakdown points occur. And by the way, I will be taking stock symbols in about 15 minutes. Don't type them in now, but wait for my cue, and we're going to do this exact same thing as far as technical analysis with your individual stock, so I could show you where your critical stop points should be set. Okay, so we start off with the trend line. I don't know if you're using, this charting platform or not, by Thinkorswim, or if you're using a brokerage, proprietary trading platform. If you're in Canada, you got the where you got the flight desk. They have the ability to draw trend lines, and you can follow along. Now, ABC, or steps 1, 2, 3, are pretty simple. Look at a chart, find a low that you can draw and connect 2 points to. I'm not going to connect these 2 points here because that's really the bottom, but I'm going to pick this low, and then watch where my line goes. I'm going to extend this out, and I'm going to try to pick a secondary point that will keep in line with this trend. So I'm going to pick that line, and then I'm going to project out. See, so watch. I'm still projecting out, but I'm really focusing on this point and this point as the 2 connection points. Why am I projecting out? Because I need that line to project the accelerated trend. Now follow me here. We're just connecting the dots. Now, my new, let me get rid of that. My new starting point is going to be this second connection point on the first trend line. Again, I don't want to lose you here. Just follow along here. So I'm taking that low, and I'm going to accelerate to this low and project that, or I could even go to some of these lows here. There is my second accelerated trend line, and I keep doing this. I'll go from this point here, the most recent line that touches, or the most recent low that touches the line, and I continue to project out just like that, and I drop it. Now, to make it easier, this is a monthly chart now. It's a monthly chart. Now, to make things a little bit easier for my eye, I'm zooming in with my magnifying glass. Then I take this low, connect it to some of these lows, and project out. There you go. There are my fan lines. Now, again, I'm repeating, but I think repetition is the best teacher for us here. If you could learn this concept here, not only will you be more efficient in protecting the stop loss from your account, but you can even do this the opposite way when you're looking for buy ideas, and I'll get to that in a moment. But right now, if the market starts breaking down below this most recent and most accelerated trend line, then you could expect the stock to drop to the next accelerated fan line. So very rarely, I'll step back here, very rarely do you have more than 4 fan lines, and on average you'll have 3 fan lines. This 4th line tells us that the trend has been accelerating. Now again, I'm trying to layer this for you so you can get it, and then of course I'll be able to take questions. So if you have questions as I'm describing this to you, type those in so I can address them as I'm presenting this to you, and then we will be able to get those questions answered as I'm drawing the pictures here. Okay, so fan line number 1, fan line number 2, fan line number 3, fan line number 4, with 4 being the most accelerated line. Let's face it, the more vertical a stock price goes, the more likely it's going to drop. Years ago I used to talk about the kite. For those of you who have been sticking with the market rates for a while, remember my kite story? Well, the fan line represents the angle at which the kite is going up. So imagine a kite. Remember when you were a kid, you were flying a kite, the kite would go up, but what do you need for the kite to stay up? You need wind. You need the wind. The volume represents the wind under the trend. And what's happening here is the angle of the kite is going up, so the acceleration of the price is going up. But look at the wind here. Look, the volume is dropping. So these are the telltale signs that we look for that really indicate that the market is getting ready to drop. There's no great voodoo magic or tea leaves involved. We're simply analyzing the force of the trend and the steepness of the trend, which is basically telling us the aggressiveness of the buyers. If the angle of the trend is very steep and approaching 50 to 60 degrees in angle, then that tells us the buyers are accelerating or they're motivated. But the volume is the gas pedal or the wind, as I mentioned. So this is really, really important, because a lot of people think, oh, well, if the Dow falls off and the Russell 2000 falls off, I should be safe in the tech stocks or the NASDAQ. I should be safe. That's not true. At this point, there is no safe haven except for cash when you get stopped out. Okay, so I'm checking. Any questions? No, don't see questions. And that looks good. Okay. All right. See. All right, George. Hold off on the stocks, because I have one more thing to talk about, and then we'll ask for stock symbols. So George, get ready to type that in again, because it'll get wiped out on my scrolling Q&A box there. Let's talk about the VIX. The VIX, as you can see, I think this was up. These are the lines that I actually drew from the last presentation. I don't know if you remember, but every month we do this open house, and I have not changed the VIX. This is the line that I drew as a forecast to what I thought the VIX was going to do. And it wasn't, again, any kind of magical formula or design in angles or anything like that. It was simply me going back and saying, okay, we have a Harami here, which is bullish, and I see in the past the angle at which the VIX has gone up in the past. You see these angles here from this low to, let's say, this high. You can see that the angle of the VIX when it reverses is pretty consistent. You know, the VIX is highly volatile, but it's not a trending stock. It's an oscillating indicator that tells us, or it measures the excitement level of the investors. So I drew this, and it looks as though that the VIX is following that line that I drew perfectly until we get up to the next resistance point up here, which happened to be, if you look at the daily chart, this happened to be the gap. You see the gap here? I'll zoom in. This gap level is a target price that I've drawn for the VIX, because gaps on the VIX fill or have filled 100% of the time. Give it enough time, the gaps will fill on the VIX. So over time, I think the VIX is going to start to move up. If I think the VIX is going to go up, and the VIX is a contrarian indicator to the S&P, what does that tell us about the S&P? Well, we just talked about the S&P. If the VIX looks bullish, then there's a good chance that the S&P is going to be bearish. So there's, over the next days or so, there's a good chance that the S&P is going to start to drop below the support level. So again, shouldn't fear that. Expect it. Prepare for it. Protect your account, and be ready to make money on the way down. You see, for those who are option traders, remember, you can buy puts on the spiders. See, look, this trading platform will show you all the puts. You can go out there and buy November, or you can buy January puts on the spiders. You could go out there and buy even in-the-money puts for $6 or $7 in here. And if the VIX goes up and the spiders go down, you'll make money by buying these contracts. For those of you who are not traders in the options, then learn how to short sell. You could short the spiders. You can buy bearish funds that work inversely to the underlying market. Again, don't fear it, embrace it, and you'll be just fine. All right, that took me 19 minutes to talk about that. George, hold on, George. Don't get in there yet. Hold on. I'm going to take you. Hold on one second. I want to make an announcement that we're pretty excited about, and that is, drumroll please, the market guys are bringing back the weekly market report. Now let me tell you why that was put on hold for a second. For those of you who are dialing in from Canada, you may know that they changed the law, actually, with regard to emails, and that people have to do a hard opt-in. In other words, you have to opt in and say, okay, I am accepting and even wanting emails from you. And so we put it on hold until we got that all straightened out and figured out what the laws are. We want to be absolutely compliant all the way around. So now that we got it straightened out, let me show you how you're going to receive the weekly market reports. If you go to TMG or shop, if you go to shop right here, there is the weekly market report on the menu. Now, for those of you who are Oracle subscribers, this is a value add. In other words, you do not have to pay for this. If you're an active Oracle subscriber, this, you see this right here, this remains absolutely free for you. For those of you who do not subscribe to any service, you'll still get 4 weeks of this for free, and then you opt in. Remember what I said before, so that we're compliant with the laws all around. Even the U.S. has pretty hard spam laws. We want to make sure people are doing a hard opt-in. You want this, you want to subscribe to it, and this is our record that you are opting in, so everyone's happy. Please also know, this is not an expensive report. Out of all the reports that we do for the non-Oracle subscribers, this is the least expensive. And I'm telling you, the value that you get from this is more than going to help you protect your profits and slow down on any of the losses. So you hard opt in. What's most important here, and I'll mention this briefly in the end, what's most important is that you could opt out very quickly. We do not have any kind of long-term agreements. We don't try to capture people and make it hard for them to cancel. It's totally up to you, and it's very, very easy to subscribe or unsubscribe, and that's how we preserve our relationships with our followers and our subscribers. So that's enough said there. Let me go back to the charts. All right, let's see. What's Glenn saying? Don't want to interrupt. You're doing great. Oh, okay. Okay, Glenn, thank you. And now I think you got some points there, so I'm going to be looking for your next stock symbol. All right, let's go to George. Look at George go. He's putting it in that symbol like a madman there. Let's go to George's OAS. OAS for George. George Popoff. George, buy it, buy it, buy it. Okay, here we go. Why am I saying buy right away? Can anyone tell me what this candle is? Can anyone tell me what that is? Let's see. Let's go. Thank you, John. First to answer. That's a hammer. Okay, here's the second test question. Is a hammer, again, found at the bottom of a downward leg, is a hammer bullish or bearish? Let's see. Bullish. Sheldon, Michael, Joe, thank you. Bullish, 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 bullish. Yes, bullish. Thank you, Robert. Okay, now, you just got finished hearing me say, watch out to the downside, didn't you? So some of you might actually be confused right now. If AJ's bearish and the VIX is going up and he thinks the market's going to turn around, why would he say buy, buy, buy on Oasis Petroleum? Here's why. There are certain sectors that will actually go up when the market goes down. Yes, that's what happens. This is one of those sectors that will do that. Commodity markets especially. When the markets go down, commodities tend to hold value or go up, especially gold, silver. We'll get to those later, I'm sure. However, what's happening here is you have a high volume day on a bullish signal. Those two put together is called the selling climax. That's number one. Number two, look at what we have over the market. Isn't that interesting? A gap. A gap over the market. Again, for those of you who know, I'm going to ask you a question. For those of you who are learning, watch the answer. If you have a bullish indicator with a gap above the market, what does that mean? What does a gap usually mean when it's above the market? Who wants to handle that one? Fill the gap. Thank you, Jennifer. Yes, 80% of the time, gaps, which is this here, will fill. What does fill mean? It means that there's a very good chance the stock is going to go up to that point and then reverse like that. So looking at this hammer pattern, you have it trading right around 42.5 with a price target up around 50 to 51. So, George, are you buying this? Do you own it? Are you thinking about buying it? What's your position so I could help you in the event you do buy it or own it? I can now show you how to walk through this and set your stop. So I'm sticking with George. George, so you're thinking about buying it? Is that correct? I'll wait for your answer. Yeah, George, thinking about buying it. That's the question. And a little bit of a delay there. Yes, George is thinking about buying it. Okay, now we're looking at a daily candle. Now, as we walk through this, and by the way, folks, as I'm analyzing the stock to give you the steps of where we would buy, where we would sell, and where we would put our stop loss, we have to go through a checklist, an absolute checklist. And here's why it's important. Whenever you buy a stock, especially when it's showing a bullish sign, you actually have to expect that the stock is going to go against you. You buy it because the signal is there, but you have to prepare and protect your account as though it's not going to work out. And again, that goes against the way we think, because let's face it, who in their right mind is going to jump into something unless they were absolutely certain? But in the world of trading and investing, you have to be a good risk manager. So you have to treat it as though this animal is going to bite you as you get closer to the cage. So prepare, keep your distance, get ready to move. So there's a couple of areas that you can protect yourself. The first area, let me change my line here, price level. If you're a buyer and you buy on this hammer day, so today the market's closed obviously, so tomorrow you would be a buyer. It would be better if you buy in a green candle, but wherever you buy, it needs to be above this low. The low of the hammer is actually a support level. So we're going to draw a horizontal support level right there at 41.19. So if you buy it at 42.50 or you buy it anywhere in this area, you need to put your stop somewhere below 41.19. I would suggest you put your stop right around 40.5. Below support. Remember, you don't put your stop on support. Certainly don't put it above support. You put it below support. That way if the stock breaks down below support, you're minimizing your loss. This is a conservative stop level because you'll buy shares, but you're not giving a stock a whole lot of room to hurt you. Okay? The second place you could put a stop loss order is down here, below 40. Then there's another support level down here. Now, George, pay very close attention because I'm going to ask you the question directly. If you're using the 1% rule, which means you know how many shares you're going to buy, what happens as you lower your stop? So in other words, if I decide to buy at 42.51 where it closed, what has to happen to the number of shares that I buy if I continue to lower my stop loss order? So I have a choice. A, put my stop at 40.5. B, put my stop here at, let's say, 39. C, put my stop at 38. What has to happen if I change or lower my stop level? What has to happen? Go ahead. Needs confirmation? No, that's not what I'm looking for. Okay, thank you. Thank you, Gerald. Yes, Gerald has it right. If you want to buy X number of shares, you put your stop here. But if you want to lower your stop, you're allowing the stock to go further against you. So in order to offset the risk, you have to buy less shares. If you want to give the stock more room to drop further, you again have to buy even less of a number of shares. So that's the relationship that you have right there. So I think this has a chance of going up, but we're going to treat it as though it's going to bite us and move against us, so we have to put our stop in. George, finally, as the stock moves up and gets closer to filling this gap, you obviously want to trail that stop. So as the stock goes up, each and every time, you want to move your stop up in more or less a ratcheted level. So as the stock goes up, you want to protect your profits. Simple as that. Okay, now, Ron, I'm going to Ron. Now remember, you might want to hold off until I ask for the stock and the next symbol, because what's happening is the Q&A box is already scrolling on me. Ron says, is VDSI a buy at this time, and what would be a good entry point? I do not own the stock. Okay, let's take a look. Now, please, let's do this again. I'm going to do this. I'm going to slow it down a little bit to get the repetition, but then I'm going to speed it up even more so we can get more stock analysis in. All right, so VDSI is the stock. What's my first impression on this? 1, 2, 3. I would not be an aggressive buyer. Can anyone tell me why? I mean, it's immediately hitting me. I do not want to be an aggressive buyer. Why? Well, here is why. Boom. Remember the fan I did? Fan level 1. I'm going to do it quickly. Fan level 2. Fan line 2. Fan line 3. I can even do this. Fan line 4. Ooh, this is pretty aggressive here. Remember, I said you rarely have 4. We actually have 5. We have 5 fan lines here. Okay, now watch. Ron, you paying attention? I know you're tempted to buy this baby, but we have 5 fan lines here. And look at the volume today. Can you see the volume? Volume is 25% less than it was on Friday. Even though it's a green candle, this is called a stale green light with accelerated fan lines. It's very rare that I see, actually this is 6 fan lines, 1, 2, 3, 4, 5, 6. I could even go so far and draw a 7th fan line, because this, you can go here and say, there's the 7th fan line. When I see the fan spread out that far on lower volume and a succession of 1, 2, 3, 4, 5, 6 green candles in a row, that's called the stale green light. What are we expecting over the near future? A red signal, right? A red candle and a possible break of maybe even 3 fan lines in a brief downturn in the stock. So if anyone is long the stock, again, Ron, I would not be buying this one. Unless it pulls back to a role reversal, this is not a strong buy candidate right now. For those of you who are long this, and I don't know, but if there's anyone long this stock, I would actually sell at least half the position and then maybe put a stop loss below this second most accelerated fan line. I would put it somewhere below here to get out of the rest. That's the way I would treat that one. All right. 1, 2, 3. Type in your stock symbols, and then I'm going to go back and look at some of the questions there. Who's the first one? Okay, JP. Let's see. Now you got 4 W's there. Let's put that in. www. WebCorp. All right. Now here's what JP Nestor says. I bought www after the close on September 16th with a 7% trailing stop. Before I analyze this, JP, the 7% trailing stop sounds like an Investor Business Daily Bill O'Neill stop loss strategy. I love Bill O'Neill because he turned the world onto stop loss orders using a calculation. However, I use the 1% rule, which, by the way, is taught on the website. If you go to the market guys up here and go to videos, watch, I'll show you here. By the way, we added 2 videos on the top. I don't know if you see this, fan patterns, which I just talked about, and the call option. But if you scroll down and you look at the 1% rule for managing risk, where is that? Oh, Bill Shanley, my 1% rule. We teach the 1% rule based on the account value, not the price of the stock. The 7% trailing stop is based on the share price. So JP, let me help you out here and let you know that if you bought it on the 16th of September, let me mark that. Here's what I'll do. I'll go a vertical line, a timeline. Let's go to the 16th. Where is that? Where it is? September 16th is right there. Boom. I'm putting the line. Okay. Let's analyze, first of all, your entry point. I like it because you have a bullish. Oh, look at that, folks. JP is the model example of when the buy. He saw a support level down here. He noticed the bullish engulfing pattern, and he bought it because the bullish engulfing pattern formed. So what do? JP, I imagine that you are shooting for the gap to close here. So I imagine you're shooting for a $26 exit strategy. Here's what you do. Actually, before I tell you where you put your stop, let me ask you, JP, where is your stop, by the way? Can you help me with that one? Let's see. JP, all right, you did on the 20-day moving average crossover as well, but where's your stop? Let's see. I don't see again, there's a delay, so I'm waiting for JP to answer me on where he put his stop. JP, if you're not answering me, I'm telling you, I imagine you're crawling into that place where you don't want to answer. You have to put a stop in. Okay, let's go. If you don't have a stop, all right, so be it. Here is where you should put your stop. You need to put your stop somewhere below these lows, right here. See that? The reason I picked that is because that's the only support level that I can see in recent history that we can count on, and it's fairly close to this role reversal area here. So this former resistance broken now turns into support. So if you bought it on the 16th, you need to put a stop somewhere below support. So I would suggest right around 18 to 18 and a quarter. I wouldn't give that stock much more room to drop. And that's really important that you do that. Okay, all right. Okay, so you did 7% on the trail. I don't like the trailing percentage on price because here's why. As the stock goes up, let me show you on the daily chart. As the stock goes up, it's going to create new support levels on the way up. Let me show you how that happens. Watch, I'm going to remove all drawings. Now look, I'll zoom in even further. Right here is a former resistance area. See that? So today, it closed right on that role reversal support line. So you really want this stock to move up from this point. If it does not move up over this and stay over the support, then guess what's most likely going to happen? It'll stay in a channel. It'll start to oscillate in here. And it could wind up being like Chinese water torture because you got in at a pretty good price and you're up in percentages, but you don't want this to close another day below this line because it could very well drop back down to 18.5, and that's going to turn your winning position into a losing position. So keep an eye on that one and watch for that. This is a pretty wide gap. There's a gap up here like I mentioned before, another gap up here, and there's a lot of space in between. Okay, let me go. I want to look at some questions that I overlooked here. What's going to happen with steel companies like AKS if market going down? Well, Luis, I have to tell you that commodities, again, are going to be more in favor. And again, this is not an absolute certainty that all commodity stocks are going to go up. I'm just telling you there's a tendency that they'll go up because, and here's why. The market is expected to go down, but we all should know what the Fed has been putting out. The Fed has been talking about hiking rates down the road. Now, why would the Fed be even thinking about hiking rates? Because inflation is a threat, and the only way to hedge off against inflation is to raise interest rates, which, by the way, raises the prices of commodities, because as inflation kicks in, commodity prices will change. There's going to be that fluctuation. So this is again the relationship that the markets have to one another, and you want to really be mindful of that. So you want to put your money where the money is going. So follow that. And even with the commodity stocks like steel and gold, silver, corn, even you look at CORN, That's one that's considered more. This is the corn fund. You see here, this has been going down because the markets have been going up. But if I erase all these lines here, okay, remove all drawings, you'll see that on a monthly chart even, look what's been happening. Remember, our markets have been going up. Look at what's happening to the corn market. You see this? And right now, this is a market. This is a chart that's going back quite far. Actually, it's going back into. This is actually going back about 4 years. We are at a 4-year record low for CORN, and we have 1, 2, 3, 4, 5 months of red candles. So this is a stale red light. I'm expecting corn to start moving up as the market goes down. See, for those of you who are joining and maybe not even asking any questions or submitting any stocks, one of the best reasons to participate in these monthly sessions is because, and this is just a tip, you should be watching this with pen in hand and paper ready to take notes, because this is where you're going to get some of your best trade candidates. I'm not telling you to buy this right now. I'm telling you get ready to buy this. It's been here's what I was telling you with regard to the fan going the other way. Watch. I'll show you this. I think this is really important for me to do this, so bear with me. I go from this high, remember, and I'm going to connect this from here to here. See, why can't I do this? Why can't I connect it to here? Because that line has already been breached, you see? It's already been breached here. So there's no sense in me drawing the fan line here. I have to take a high and connect to another point that keeps that trend still intact. Boom, here it is. Now, I take this high and I go down to here. There's the second fan line. Now, that's a monthly chart. So what am I going to do now? Zoom in. I could even go a little bit further. You see? I could adjust this. Hold on. Let me get rid of that line. Watch. I screwed that up. Hold on. There it is. All right. Let me move that line and make it a little bit clearer. Here. Boom. So I'm going to do this. Connecting to this high. Projecting out. You see? And connecting to some of these highs. There's my other accelerated line on the weekly chart. Now watch. See how I'm zooming in? It's like a magnifying glass. Can I accelerate that again? Perhaps. I could do that. I could probably take this and go here and go a little bit further. Okay? So, we just talked about CORN as a possible buy. Right? Remember I said, get ready to buy it. Why are we not buying it right now? Can anyone tell me? Come on. This is audience participation part right here. Why wouldn't we buy it right now? Can anyone tell me? No trigger. Thank you. Absolutely, Michael. There's no trigger. Where's the trigger? When the fan line breaks. If you want to be more conservative, then wait for this fan line to break. So in other words, when it starts doing this, you could actually put a buy stop in around 24.5. A buy stop will only trigger the buy order when it's trading at 24.5. If you put a buy stop in at 24.5 and it's trading 23.35, it's not going to execute. So this is a strategy where you're using buy stops to execute the buy order only after or only when the trigger has fired off, and that's what Michael was referring to with regard to trigger. So again, going back, I love keeping this one on my watch list, and I'm waiting for it. Now, what I could do also, going back to the daily, is if you don't want to put a buy stop in, again, I'm giving you some ideas to feed off of, I can go here and add an alert. So, what did I say? That's going to be right around $24. So, I am going to trigger an alert at or above, what did I say? Let's say 24. All right, so I'm going to put 24. Boom. And then I'm going to put a note. Buy trigger over fan line. There we go. There's my note, and I'm creating it. Now watch what happens. Again, not all platforms are going to look just like this, but a lot of them have price alerts. Please, folks, use the technology in your favor. That's what it's there for. Heck, if I had that one little tool that I just showed you in a buy trigger alert back in 1985, I can't even tell you how many more millions of dollars I would have right now. It's just from the technology being my watchdog. See, now that that trigger is is set, I don't have to look at that. I don't even have to pull this chart up, because what will happen is if the stock goes up to 24, I have it set up so I can get a text alert, and that will send a message to my phone, and I will get an email, and it will draw my attention so that on the close or towards the close, I will see if it's trading over 24. Boom! If it's trading over 24, I buy it. I immediately put my stop below the most recent low, and I'm on my way. See how simple that is? Now let me slow down a little bit, and then I'm going to slow it down, then I'm going to really accelerate into rapid fire stock analysis. And let me just tell you this. You need to be patient. You really need to be patient. You have to wait for the stock to come to you and trigger the signal. Think about this like fishing. I did a speech over the weekend talking to a large group of folks, and I talked about not fishing with a baseball bat. See, a lot of you are chasing the trades. You're trying to force the trade to jump into your account. Don't do that. Set the bait. Set your alerts. Wait for it to trigger like a trap, right? If you set crab traps, you're going to wait for the crabs to come to the trap, and then you capture them. This alert is a trap for your stock price. Wait for it to trap. Go get it. Then immediately protect your catch. Immediately protect your account by the stop loss order. And that's it. You know, I've been doing this for 33 years, and I get so excited when people finally get it. And guess what? Then when people start forcing the trades, it makes me crazy. And what makes me even crazier is when someone takes a winning trade and turns it into a losing position. Listen, we bought NUGT on an alert. We got stopped out, period. NUGT is a leveraged metals fund, and it dropped down. It dropped down below our, we got triggered out, we lost money, but the other trades that we're making money on make up for the loss. That's how you do it. You're not going to make on every single trade, but you want to make on the majority of trades. Okay, I hope you get that, and I hope my passion for this didn't get in your way of really understanding this. Okay, here we go. Ready? 1, 2, 3, start typing in stock symbols. I'm going to race out and try to get these as quickly as I can. Who's the first one? Okay, AMD. I'm just going to rattle them off. I'll tell you what I would do with it, where I put my stop. Okay, I would be ready to buy this right here. Boom. I'd be ready to buy it on the next green candle because you have long shadow doji here. Wait for the green candle, bounce off the support, put your stop below 360 or 365. You get it? There's support. You want the pivot point to form bouncing. As soon as you get the green candle, you put a very small space below the support and you buy it and you protect it right below there. WLK. Boom. WLK. I would not buy it. I would sell it. It looks like a bearish engulfing pattern to me, or very, very close. If you are not out of it and you want to hold on a little bit more, there you go. Put your stop below that support. Yeah, I'm going to draw my lines horizontally here with the price level. Can you see why I don't like this one? It's failing. You have a lower high and you have a gap below the market. See this gap? That's going to act as a magnet. I may not even want to wait for that support level to break because there's an 80% chance it's going to go lower and fill this gap. So if you own it, protect the profits and get out of it, and then wait for the stock to fill the gap, and then if all things look good, you get back in at a lower price. Okay, ready? Let's go. I'm going to try to rattle these off. Paul says, how do you feel about SLV? I love silver. Paul, I am still buying silver. I'm a long-term investor in silver because I believe that inflation is around the corner, and eventually silver is going to come in. Look at this. Silver has a green candle on lower volume. What does that mean? Downward leg, right? Downward leg, and the volume is dropping. That tells us the sellers are losing momentum. Here's another reason why I love silver right now. I will continue to buy silver. I don't care if it goes down to $8. I'm still buying silver. We are on, look at these lows. Look where we are. Ready? Look at this. You're on a major support level here, right around 17. You have another support level here, and you have another major support level. Yeah, look at the price difference. And you're probably saying, AJ, you mean you would hold silver if it drops $10 from here? Folks, I'm accumulating silver. I'm not trading silver. I'm accumulating. The reason I like silver at the lower prices is because my goal is to get as many shares of silver as I could possibly get to prepare my retirement account for inflation. So it does not bother me if it drops lower, because that means I get to buy more shares. This has nothing to do with cost averaging down, has everything to do with accumulation. I've been trading silver for 33 years. I am very comfortable at these levels because we're well below production costs. In other words, it costs $17 to $19 to pull it out of the ground. If it trades below 17, then I'm buying it below the cost of production. It means I'm getting it cheaper than the miners can get it out of the ground. So I love that. And if the miners, again, I got to speed it up, but if the miners are seeing silver drop below the production costs, they're going to shut down the mines. And that means less production, less supply, more demand, more profits for AJ and family. Okay, that's the way I look at it. All right, ready to go. Long, let me see. Dylan is long the 67 January puts on, I think that's United Airlines, right? UA? Let's see. Oh, Under Armour, excuse me. You long the puts? Stay long the puts. Look at that bearish engulfing pattern on the monthly chart. I love it. That's a monthly bearish engulfing pattern with long shadows. I'm not even going to go to the other charts. It's a beautiful bearish condition. Dylan, I would love it if those were the January 2016s. I mean, January 2015, okay, but you might want to start accumulating some longer-term put positions to allow you to hold that position longer. Okay, rattling down the list, Jeff submits INVN. INVN. And that is, holy mackerel, look at that bearish engulfing pattern on high volume. Again, monthly. Jeff, I don't know what your position is, but I don't like that on the buy side at all. That rarely do you see bearish engulfing patterns on the monthly because they're that certain. And you look at the weekly chart, this one looks like it's failing all support levels. I would not be long that one. Okay, John, SPLK. I'll try to get as many as I can here. Folks, listen, if you're not submitting stock symbols, but you're seeing opportunities in the symbols that our guests are submitting, add them to your watch list. Don't let that get away from you. Add them to a watch list, take notes, and then you can add notes to your watch list. Okay, so SPLK, let me put that in, SPLK. Got to calm down a little bit. I'm getting too excited, I know. SPLK not looking good on the weekly chart because you're breaking down below a roll reversal support. Let's look at the daily chart. Don't like it. It's actually breaking down, but John tells me bought the October 60.57 bullish put vertical credit spread. I know it's a mouthful, but you're bullish with the gap below the market. Not good. Not good. I would get out. I really would. Cut your losses short because it looks like the stock is going to go down to 47, which is going to put that whole spread in the money, and you will lose on the difference between the spreads. Not good, John. So I hope that didn't ruin your day or anything, but I'd rather see you lose less than to hang on because you're fighting the market. Okay, Ed, I could make a comment on Therm, but I don't know if that's the right stock symbol, and I don't know what your position is, so I'm going to skip to Google on that one. If you want to resubmit at the bottom of the list, go right ahead. Okay, GOOG, I'm running out of time, 6 minutes to go. Let's go. All right, Google not looking very bullish at all. We got a trading channel. Look, roll reversal support on the bottom of the channel, well-established resistance. It's going down. I am bearish on Google for that reason, with a possible downside target of 564. Folks, we're recording this call. We're recording this. So go back to the recording next month and learn from the signals. See, when you're looking at this or listening to this in the future, you can see how it played out. And you'll see that the large majority of the time, I'm going to be right because of the signals. Okay? Disney, Roberta is looking at DIS. Please, if you can, put your positions in there and what you're doing so I know how to guide you. Disney, look at the volume. Last Friday, accelerated. I'll zoom in here. Look at the volume right here. After it pulled back from resistance, you have a long shadow on Friday. Big long candle now. I know it's a lower volume, but look what's going to happen. If Disney breaks down below, what is that? If you long it and you want to protect it, put your stop below 88.70. I would put it at 88.5 and not even think about it. Tom, we already talked about silver, BRCD. Whew, this is a mouthful, huh? I think this is the most analysis I've done in a long time. BCRD, excuse me. BCRD from Joseph. Oh, BCRD. Did I do this? Joseph, is that the right symbol? If it's a Canadian one, I'm not pulling it up on this is an American platform. BCRD. All right, it's not coming up. Sorry. If you have another symbol, I'll try to take that. USLV. All right, I'm going to USLV. Hold on. USLV. I'm having a good time. I hope you are. Woo, look at that baby. I took a sell-off. This is a long silver, so it's, obviously we just talked about silver, but this is an ETN, an exchange-traded note. And I like it as long as you're protecting yourself. Look at this. This is a 20-year chart going back, well, that's about 4 years or so. So I would still be bullish on this. However, do not buy any more until you see the green candle. And when you see the green candle, let's go to the weekly chart. When you see the green candle, you want to protect with the stop below support. So I would say put it, well, you're right on the low. So wait for the green candles, preferably a bullish engulfing pattern. We did BRCD. Thank you. All right, BRCD. All right, Joseph, let's see. Okay, all right. What does that look like? Who can tell me what kind of top this looks like? Who wants to be the first to answer that one? Those of you that follow, those who follow the, who's following Sing? Oh, look at that! I gotta get to Bruce. He's crushing me with the symbols. I'll get to you, Bruce. Don't worry. Yeah, double top. Exactly. Ron, Glenn. Yes. Thank you, Ken. A double top here is bearish. Just Google images. Go to Google Images and put in double top candle formation. You're going to see there's the textbook. There's a textbook example. Bruce, I got to tell you, as many times as you put CL in, we have so many symbols coming in, so I'm doing my best. Okay, Bruce, you're long at 64. You're a profit. I would hold it. I would absolutely hold it because this is a weekly chart. Here it is Monday, so don't count this volume. This is a weekly chart, and the green candles have been accelerating. Colgate-Palmolive has been one people have been hanging on to since the Great Depression because it is very resilient, even in down markets. If people see a down market, they're still going to go out there and brush their teeth, shave their faces, and wash their hair. Boom. Colgate is one of those stocks that you can hang on to. It's one of those safe havens. And also, Bruce, I'm trying to pull up the daily chart. I got 2 minutes to go. You got to just be careful because it's about to fill a gap here. You see that? So if it hits 66, Bruce, what you have to do is you have to roll your stop up. Let me get rid of some of these lines so I'm not confusing anyone here. Hold on. Bear with me. I might go a little bit over. I hope you're okay with that. Watch. Bruce is long at 64. Let me mark where Bruce is long. See that? Now, watch. It's showing a green candle on lower volume, so Bruce needs to be protective. What do? I go to the most recent high, and I draw a line. Bruce, this is where you need to put your stop, below 65.11. So if you bought it at 64, put your stop at 65. Don't worry if you get stopped out. Really, don't worry, because you're at a point where the gap is getting ready to fill. Today, it almost filled within pennies. What happens after a gap fills? It generally reverses and goes lower. Okay? That's it. I got Bruce. All right, who else? All right, let me just give you a little hint. Bruce typed in CL long at 64 probably 80 times. So, all right, I'm going to take one. I have time for one more. Let's see where it is. I got to get around, Bruce. I got to go look for the next one. All right, Joseph. Um, Joseph, what's the symbol on that one? That's five symbols. The five symbol. All right, I got to go to Edbaldo. AXP, AXP. AXP. Let's see. Come on. Why is my system so slow? It shouldn't be that slow. It's American Express. Hope you could still hear me. Ooh, sell it. Sell it. You're long the January 15 $40 calls. I don't know where you bought them, but here's what's happening. It pulled back from resistance, and it's looking like it wants to come down from that. Understand, American Express is most likely going to follow the general markets. It's going to trade in sympathy with, like the domino effect, and you're pulling back from a resistance area. So you got to be really careful with these options. What I would do, Eduardo, is I would put a credit call spread on above the market. See if you could get some premium there, collect it, and bank the cash. That's my option talk for put money in the bank and protect if it goes over resistance. Okay, finally, I'm going to repeat. The good news is that we have the weekly market report coming back, which is going to be delivered every Saturday morning or possibly Friday afternoon. At the end of each week, I'm going to give a detailed market report that will help you with general market conditions and where you set your stops. For the Oracle subscribers, we are including that as a value add, and we are giving that to you for free because you're already paying us $149 a month for your trade alerts. If you want to subscribe to the Oracles, go right ahead. It goes month to month. You can cancel anytime, don't worry. Or if you want 4 weeks free on the market report and you're not a subscriber, it's pretty simple. It's right there in black print. You can get 4 weeks free, and you won't be billed until November 1st, so you get that week free. At any time after that, you can cancel your subscription. We do not bind people to long-term agreements. It's not in our DNA makeup. We don't like binding people to anything. We want this to be a free-forming relationship with our clients so we can show them how to make money in the market and stay profitable through proper risk management. Whew, holy mackerel, I'm out of breath, and I am still charged up. So I want to thank each and every one of you for joining me. I hope you sign up for the next one because it keeps getting better, folks. It keeps getting better. Thanks for joining tonight. Have a good one. Bye-bye.